Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas, Markets Analyst at FX Pesa. So feel welcome to the session. We have quite a number of things we'll be focusing on today. On one side is the economic calendar, which doesn't seem to be quite busy today, but we'll do a weekly overview to see what will be the major news for the week. So at the same time, we'll also be looking at the key market price levels and, of course, a number of company earnings that are set to be announced this week. So once we cover that, hopefully everyone will have a successful day in the markets. So once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. So let's begin right away with the economic calendar. So as you can see, today being Monday, we are not expecting a lot of news. The only news that were expected were the Business New Zealand Services Index, which came in at 47.8, slightly lower than the previous reading of 49.6. Then visitor arrivals in New Zealand were up 11.3% in the previous month, compared to the previous reading of negative 27.5%. Then this is a German wholesaler price index, which came in at negative 0.2% compared to the previous reading of negative 0.2% and an expectation of negative 0.1%. So the three events didn't have any major price action movement. So they are basically low impact events in the markets. So going ahead for the week, we'll be having quite a number of important things. One, there will be the monetary policy meeting minutes for the Reserve Bank of Australia. This is tomorrow at 4:30 a.m. Wage price index for Australia, and of course, Chinese industrial production and retail sales data. Then later on in the day, we'll be looking at the claimant count change in the UK, average earnings index, as well as the unemployment rate. Then later on, we'll be looking at the Canadian CPI, or inflation report in Canada. Then core retail sales, Empire State Manufacturing Index, and retail sales data for the US on Tuesday in the afternoon, 3:30 p.m. Then on Wednesday, this is the only central bank that will be reporting their interest rate decision this week, and this is the Reserve Bank of Australia, which is expected to hold interest rates level at the current 5.50%. So then we'll be seeing the interest rate statement and the press conference. Before we turn over to the UK and look at the consumer price index, CPI, we'll also be looking at the core CPI, producer price index, PPI output, RPI, and HPI. All this is basically inflation data from the UK on Wednesday at 9 a.m. Then FOMC meeting minutes at 9 p.m. Before we get to Thursday and look at jobs data for Australia, unemployment claims for the US, and Fed manufacturing index. Then we end the week with Japanese inflation data. We'll be looking at the national core CPI. We'll also be looking at retail sales for the UK, and of course, CPI for the Eurozone. So once we go through this, then it basically concludes the end of the week. So with that being said, as you can see, it's largely a quiet week. We don't expect any major happenings. So as a result of that, we'll be focusing on a key number of data points. So first, let's look at the earnings this week. So I think I have a summary. Should be somewhere here. So retail earnings will be on focus this week, and this is a key indicator of the strength of the American consumer. So some of the top companies that will be reporting their earnings this week include Home Depot, Target Corporation, Walmart. We'll be also looking at TJX companies, Rose Stores, and of course, John Deere and Company. So if the earnings from the retail sector basically show some form of resilience, then this is supposed to be overall positive for the S&P 500, the Dow Jones, and of course, the NASDAQ. So at the same time, people will be more interested to see how healthy the consumer is. So if the consumer is healthy, then we know that the Jerome Powell will not be very happy. They want a weaker consumer so that inflation can continue moving down towards the 2% target. So in the last reading last week, we saw US inflation rising to 3.3%, sorry, 3.2% from a previous reading of 3.0, which means inflation is now moving in the opposite direction. And this is not something that the Fed likes. So they want to see inflation moving downwards. So if there's a further strength, and let's say there's a massive report showing a very good performance by the retail sector, then it would be quite negative for the Fed, and the Fed may have to go and hike interest rates on the next meeting. So it's very important that these earnings come in slower than expected. But if they are hotter than expected, then it will be detrimental to what the Fed is looking to achieve. So as for the individual stock tickers, that is Home Depot, Target, Walmart, TJX companies, and Ross stores, if they have better than expected earnings, then we naturally assume that the stocks will also be gaining in value from the reports. So you might be interested in checking them out on the charts. We have all these shares that they are available for trading. So you can check them on your time later in the day. So that being mentioned, let's look at a number of a number of charts, try to understand where they are moving, what are the key price levels, and hopefully use that information to our advantage. So hello, Edward. I can see there's Musa, Kevin, Ruben, DNC, Humphrey, Harun. I can see there's Richie, John, Leonard, Lemuel. Thank you, guys. I'm doing fine, J Squad. Morning, Joseph and Samuel, as well as Kevin. I'm happy to see you guys have joined the session. So let's get started with the technical analysis. I think the most important chart for the day will be the US Tech 100, or basically the NASDAQ 100 chart. So as you can see, I had done some analysis back last week, showing that this particular trend line was very important for this chart. And every time the market got closer to this trend line, it was a very nice buying opportunity. So every one of these highlighted areas is a good buy. However, from last week, remember what we say, the higher the number of times that a trend line has been tested, the higher the likelihood that that trend line will be broken. That is, the weaker it becomes. So in this case, I highlighted that this could be a potential break. And then eventually it happened that there was a break and the market retested that area before continuing to push back downwards. So from the 1 hour chart, this is what we had, the market going straight up for the break, pulling back the following day, and then kept going down. And now it seems like we have a trend line that is developing here, basically touching on the highs, save for this one. So here, we have a market that is now changing direction. A market that was previously very bullish is now seeming to be very bearish. So it's oscillating between two trend lines. So I think this is the path that it's taking. So if you look at the swings, they keep on going up and down, and now we just had a burst of momentum towards the upper side. I expect at some point the market will continue going downwards. So from the 4 hour chart, this is how it's looking like. So if I remove this, then we can all see that there's a good chance that the market has actually broken this trend line and may continue pushing down lower. So remember, last week was a second consecutive week that the US Tech 100 was losing, and it was the same story for the US 500 or for the S&P 500. So from the 4 hour chart, this is how it's looking. So if I zoom out, you'll notice that it was a similar story. One trend line acting particularly as support, and then eventually getting broken. Market crosses the week lower. The following week, it keeps pushing down and crosses lower. And now this week, it has started with a strong burst of momentum upwards. But then at some point, I expect the market to find resistance and start moving back downwards. So in this case, it's an issue of observing to see if there's entry of sellers in this market, let's say around this area, and then looking for a short selling position. Of course, you have to be careful, practice proper risk management. And of course, this is not a recommendation to trade. You have to do your own due diligence and research. So same case for US Tech 100. Big jump towards the upper side, Now it seems like it's already rejecting the area, and we could be seeing the price moving back downwards. Then we have US30. US30 is a little bit different. This one seems a little bit more resilient, has been attempting to move up higher. But then there seems to be an existing resistance at around 35,685. So for me, I would be very patient trading this one, looking for the right point of entry. And perhaps that point of entry would be after the market has retested the high enough times. So the high is right here. So perhaps the market will go back, retest the area again before pushing further back downwards, since as you can see, over the last 3 weeks, the Dow hasn't been particularly forming lower highs. So it's more or less of a sideways momentum. We can say that the overall direction for the Dow Jones has been just following this path here. So in this case, I would be waiting on the extreme prices, either the extreme high or the extreme low, to look for a potential trading opportunity. So that being mentioned, let's look at the dollar index. It was quite bullish last week, especially after the CPI data. After the CPI data was announced, there was a big sharp drop here before the market reversed immediately and kept going up. Then on Friday, continued pushing higher. But today, being Monday, this is what we are seeing here, the market moving in the opposite direction, indicating that the week has started with a weaker dollar. So with a weaker dollar also comes the strength of these other currencies. So for the pound, you can see it's still extending this range, which is basically a sideways momentum for the pound. So with the extension of this, clearly, you can see that we are trading within the lower bounds of the range, which is being extended towards the lower side. So I would say this is the new low for the range. And now there's a good chance that we will be seeing the pound attempt to gain against the dollar and perhaps some further upside towards Friday's high. So for me, Friday's high would be particularly a good point to target, especially in an area where we don't expect much news in the markets. So there is a good chance we could be seeing the pound keep pushing higher and perhaps get to 1.27349. So as for Euro USD, bouncing from a very nice bottom here, I think the support level is holding just well from this area here. Notice how the market was attempting to break the area, failed to break. So at the same exact point, which was the low of last week, the market comes down, gets to the support, and then bounces and moves back upwards. So the same way, I would be targeting the same area here, which would be the high that we saw on Friday. So I would expect that the euro will continue gaining against the dollar and perhaps attempt to retest the high that we saw on Friday. And of course, if it was to move back downwards, then today's low would be the target. So as for USD JPY, we eventually got to our target, despite the market really struggling to get there. So you can see the first time we were expecting the market to go for this area here. Eventually we got to that. Then during the CPI, there was a big jump downwards before the market continued higher. And eventually we go to the target, which was the previous high area here. So this was a nice target, and the market really struggled to get there ever since getting to this bottom of 137.243. But now that the market has hit the target, which is the resistance here, I expect that there will be some form of pullback. And the pullback may happen particularly today, especially when we are seeing the dollar being weak against other currencies. So there is a good chance we could be seeing the yen strengthen against the dollar and perhaps move back to retest this level, which is basically 143.878. So this was acting as a resistance previously. It could be the new support here if the market moves back downwards. So we cannot also trade off a potential break. So remember, long term, we're expecting the US dollar to continue strengthening against the yen and eventually go to retest the 151.914. But then, now that we have just hit this major resistance, I expect some form of pullback in what may be a cap and a handle. For those who are not familiar with the pattern, it's basically something like this. Market goes down and then back up, forms a cap, then down and then back up, forming the handle. So this would be the formation of the cap and then the handle. which is usually a continuation pattern, then the market breaks and continues. So if you think of this as our cup here and the market completing the pattern, then you would be expecting some form of pullback and then formation of a cup before we break higher. So it's quite a common pattern in the markets. And I expect in this case, if the market was to pull back, then the target would be 143.878. So for USD CAD, we saw this triangle happening last week. Market broke towards the upper side, kept pushing higher, and now it seems to be struggling to form a higher high. And now what we are seeing is the dollar being particularly weak and the Canadian dollar taking advantage of this. So there is a good chance we'll be seeing the market pull back, retest the low of the day, and of course the low that we saw here on Friday. So 1.34139 seems like a nice target. Here, expecting the market to go and retest this area here, but then the resistance has already been set. So if the market was to reverse, then the target would be just nearby, the market retesting its own high for the day, this area here. Then I know everyone has been waiting to see the analysis on gold. So we look at what we're expecting to see on gold prices. There's quite a lot to process with gold, especially after it kept trading along this lower trend line. So what we are seeing here is a market that is currently pretty strong, that is bearish. So attempting to form lower and lower levels. I think the bottom that we had here may have been the bottom of last week. So bottom of last week is here, and then bottom of today is almost the same level. 1910 seems to be the bottom that we are facing. So the market was unable to get lower than that early this morning. So it means that there is a high likelihood that the journey to 1900 may as well have ended. And now we can see the burst of momentum from the last two candlesticks indicating some form of bullish entry. So in this case, there's a good chance you could be seeing the market immediately retesting Friday's high. Friday's high is just here. It's not very far off. This is 1920. So we could be seeing the market retesting 1920, then going all the way up to 1924, which was the tip here during the non-farm payrolls. That was 2 weeks ago. So 1920 and 1924 seems like nice targets for the day, especially if we continue seeing a weak dollar in the markets. So this area here could be a very nice target. And of course, if the market breaches here, then we could be seeing this happening for the rest of the day. So for AUD-USD, we are seeing a strong bounce happening here. Apologies, just a moment. Yes, we are seeing a very strong bounce happening from here. The market basically getting more volatile, but downside volatility. And from the daily chart, this is how it looks like. So today may as well be the bottom we have been waiting for. So we have been seeing the Australian dollar being particularly weak against the dollar, especially after the Reserve Bank of Australia failed to hike interest rates, leading to weakness in the Australian dollar against other currencies, and more so against the dollar. So what we are seeing here is a market that was going down, retesting the bottom. So the lowest price we have seen in a while, and I think this is a multi-year low. The last time we saw the Australian dollar trading here was November 2022. So it's almost a year, not yet a year. So here from the forward chart, you can see the way the market went, retested the bottom here, and then immediately bounced and is now moving higher. So these are technical trade, purely technical, indicating the strong burst of momentum after the market got to that support level. And now we are seeing the market doing the same. Market gets to this support level, and immediately we can see the momentum pushing higher. So there is a good chance we could be seeing the price moving higher. Of course, an immediate target would be the previous high here. So we can all see that this area here seems to have some form of conference. following the resistance that was particularly tested here, and of course here. So if there's a strong momentum following from this, then it could potentially run to this area, which is around, let me check the price level. $0.66056. So I think that's it. That's the end of the analysis. BTC is also making an impressive comeback early this morning. So after making a big spike downwards, you can see later on it made some form of a good recovery. So there's also some good news coming in from Argentina. So there was a surprise winner in the election who is currently a pro Bitcoin. So Argentine far-right outsider Javier Milei posts a shock win in the primary election in Argentina. So this is as well some very good news for Bitcoin. So there could be a chance we could be seeing a very green day for Bitcoin today. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So just checking to see if there's any questions I may have missed. From the chart of gold, has it convinced you it's a bearish despite being at support of 1912? So whenever you're trading gold, always know you're trading two assets. On one side, you're trading the dollar, and on the other side, you're trading gold. So in this case, my analysis is based on what's happening with the price of the dollar, and judging from the dollar index. So this weakness is particularly worrying for anyone who is trading gold, because in this case, a much weaker dollar would mean some bullishness happening here in gold prices. So yes, we are still in this bearish momentum, but clearly today we have been unable to form a lower low, which would be consistent with the lower trend line. So if the market kept going down and go to the lower trend line, that would mean this continues. But now that we are seeing the market push towards the upper side, then for the day, for any intraday trader, I think it's within reason to expect gold to continue climbing up and eventually get to 1920. Then you observe the price action. If it's still strong, then you start looking for 1924. So for now, that's my thesis for the day. All right, guys, enjoy the rest of the week. Remember, we'll be having more sessions tomorrow. For those who are new, you should know that these sessions happen every day at 11 a.m. So you just go to FX Pesa YouTube channel, and you'll get a live session happening every day at 11 a.m. Monday to Friday. And hopefully you get to benefit from these sessions. Australia going free digital, cashless, how will it affect the market? I don't have an idea yet. I would be lying to you. I think it's already cashless. It's not a big transition from people who are let's say majorly using cash to people who are majorly using digital money. So a majority of Australians are already cashless. They don't normally use cash. They have these credit cards, debit cards, so they rarely touch cash. So it's not a very huge transition, but you'll be following closely to understand what it means for the markets. So thank you, guys. See you on the next one.